Introduction. If most people had an option, they would prefer not to have a budget. It is limiting. It takes a lot of sacrifice and effort. You can never run out of excuses for not having a budget. You are too busy. You hope things will change soon. You do not make enough, etc. But a budget is powerful. It will help you solidify your financial future, even though you do not make much. If you're still not convinced, check out these reasons why a budget is important. With a budget, you are in control of how and when you spend your money. Do not see it as a restriction. See it as a plan that directs your spending. A budget helps you choose what is important, whether it is expanding your wardrobe, buying something you want, or saving. Additionally, sticking to a budget means not making any tough decisions when you receive your next paycheck. You assign funds to every category. You are in power, choosing how much goes where. A budget allows you to see which expenses are important and which need to be cut. A budget is not a magic solution to all your money problems, but it will take a lot of stress off you. When you carefully allocate money to every need, you do not need to panic, fearing that you will run out of cash, anxiously waiting forward to that next paycheck. A budget lets you see your financial health clearer and is a step toward your goals. It is no fun depending entirely on credit cards. You live in constant worry the balance is going up. One indicator of good financial health is spending less than you make. And a budget is the best way to ensure that you do that. To avoid going into debt, you can choose one of many types of budgets. There is the weekly budget, in which you set money for use in a week. If it is gone, that is it. You cannot borrow, swipe your card, or touch your savings. The other option is deciding to use cash. When you pay in cash, you are likely to spend less than you would with a credit card. Money issues can strain a relationship. And if this is the case for you, it is time to create a budget. Both partners need to agree to put in the effort required to make it work. Create a budget together and let everyone do their part in sticking to it. Sit down and discuss first. Come up with something that each person is comfortable with. You can then have a meeting every month to see if you're making progress. Having a budget keeps you in control. You get to manage what you earn in a way that serves you. You will make better choices and move closer towards your financial goals. Saving money and budgeting are not things that come naturally. It is so easy to find yourself buying stuff you do not need, even when you have a spending plan in place. But if you do it right, it will not be as hard as you assume it is. A successful financial plan begins with a budget. When you see the numbers clearly on a piece of paper or screen, you will know exactly what you are spending your money on and what changes need to be made. It helps you prepare for emergencies and set reasonable amounts for occasional luxuries. Sit down and create your budget. Every minute you spend will be worth it. Gather your bank statements, pay stubs, receipts, and bills. Create a worksheet. You can use an Excel spreadsheet, Google spreadsheet, or pen and paper. List your net income from investments, side hustle, your day job, etc. Next, make a list of your expenses from rent to utility bills. Subtract the total expenses from your total income. The resulting figure shows your financial health. If it is a positive figure, well done. You have extra money to save and invest. If the figure is negative, you need to work on your budget. Go back to your expenses. Figure out which expenses can be lowered and which ones need to go completely. There are alternatives to the classic budget. The 50-20-30 rule is a good place to start. With this approach, 50% of your net income goes to necessities such as food and housing. 20% goes to savings or debt payment. 30% goes to miscellaneous spending. The 60-20-20 budget, it is the same as the above one, but with different percentages. The zero-based budget. With this one, you must account for every dollar you earn. Critics of this approach say that it prioritizes discretionary spending over savings and debt payment. You can also opt for a budget app. Most of these apps let you link to your credit card and checking accounts. They will monitor your spending and give you a well-organized report. The apps typically alert you when the balance in your account is getting low or in case of suspicious activity. Some of the apps are free, while others charge a monthly fee. Cut back spending. Start with unnecessary expenses. You could downgrade your car, do away with that $5 morning coffee, give up an expensive vacation, etc. Here, choices are personal. You can cut what you want and keep what you think is important. Deal with your debt. It seems like debt and adulthood go hand in hand. Some types of debt, like credit cards, are not bad because they help you create a credit history, but you still need to be careful. Reduce tax burden. There are legal ways to reduce tax impact on your finances. Claim tax credits and deductions. Contribute more to tax-advantaged accounts like an IRA. Automatic savings. Link your checking account to a savings account and enable automatic savings. Live frugally. Go to the store once a week and get everything you need. Make a list and stick to it. Save money by spending money. Go to your dentist appointments. Adhere to your car's scheduled maintenance, etc. These are called preventive strategies. Always review your budget, monitor your expenses, and make the necessary adjustments.